Hello viewers, this is Florence Boniface. Thank you to all returning subscribers, and if you're new here, feel welcome. Kindly hit the subscription button if you haven't to support this channel. On today's video, we are going to look into record keeping to understand why it is important for a business, both small scale and large organizations, to document the day-to-day transactions. Record keeping refers to the process of creating, organizing, and maintaining records in a systematic and efficient manner. It involves the capture, storage, retrieval, and disposal of various types of information in both physical and digital formats. Effective record keeping is essential for businesses, organizations, and individuals to manage information, support decision making, ensure compliance, and preserve historical data. Here is an overview of key aspects of record keeping. We will tackle the importance of record keeping, types of records, processes involved in keeping records, the systems we can use to keep a record, best practices for record keeping, and also the consequences that are involved if you fail to keep records. So why should we keep records? One, it's for legal and regulatory compliance. Many industries have legal requirements for maintaining certain types of records, such as financial, tax, employment, and customer data. Then we have business operation. Records provide a historical account of activities, transactions, and decisions, helping to track progress, analyze performance, and support future planning. Then we keep records for accountability and transparency. Records demonstrate accountability, enabling stakeholders to review and audit activities, ensuring transparency and ethical practices. Record keeping also helps in knowledge preservation. Records capture institutional knowledge, lessons learned, and intellectual property, helping to preserve knowledge and facilitate continuity. Now let's look at the type of records that we need in our businesses. One is the financial records. These include financial statements, invoices, receipts, bank statements, payroll records, and tax documents. Then we have legal records. This refers to contracts, agreements, licenses, permits, intellectual property documents, and also litigation records. Then we can also keep personnel records, and these are the employee files, the resume, performance evaluations, attendance records, and disciplinary actions. To the next one, we have customer records. This can contain contact information, purchase history, preferences, and customer service interactions. The next record is operational records. These are inventory logs, production reports, maintenance records, and supply chain documentation. Then we can also have health and safety records, where we record incident reports, accident records, safety inspections, and training certifications. Now let's look into the processes involved in keeping a record. One, we start from identification, and this is where you determine what information needs to be recorded based on legal requirements, industry standards, and organizational needs. From here, you go to capturing. Then you collect relevant information through various means, such as paper forms, electronic data entry, or automated systems, whichever you use in your business. From capturing, then you classify your record, and that is organizing records into appropriate categories or classifications for easy retrieval and reference. For example, if you use a filing system, you will need to label your files in a manner that you're able to tell easily that this file contains maybe your employee CVs, this file contains our financial records, etc. From classification, we move to storage. And on storage, here you ensure secure keeping of records, considering factors like confidentiality, accessibility, preservation, and disaster recovery. Then we have retrieval. You establish mechanisms to locate and retrieve records efficiently when needed, either physically or through electronic search capabilities. Then there is retention and disposal. On this stage, you establish retention periods based on legal requirements and business needs, and develop protocols for secure disposal of records at the end of their life cycle. So what type of system do you use in your business? Mainly, we do have 3 types of system, and one is the manual system. This is paper-based method, and it involves filing cabinets, folders, and indexes to organize and store physical records. You can also have books. Then we have the electronic system, which utilizes database, document management system, or enterprise content management platforms to capture, store, and retrieve digital records. The last one is the hybrid system, and this is a combination of the manual and the electronic system, such as scanning paper records into digital format or printing digital records for physical storage. And now let's talk about the best practices for record keeping. You can establish clear policies and procedures for record keeping. Train employees on record keeping practices and data protection. You can also regularly review and update record retention schedules. Also ensure data integrity and accuracy through quality control measures. Or you can implement security measures to protect records from unauthorized access or loss. There is also regular backup, electronic records, and test data restoration procedures. And also monitor compliance with the legal and regulatory requirements. And lastly, periodically audit record-keeping practices to identify areas for improvement. Failing to keep records or maintaining inadequate record-keeping practices can have several consequences, both for individuals and organizations. Here are some potential consequences, and one is legal and regulatory non-compliance. Many industries have specific legal and regulatory requirements regarding record keeping. Failing to meet these requirements can result in penalties, fines, legal liabilities, and even criminal charges. Non-compliance can also lead to difficulties during audits or inspections. Then we have financial consequences. Poor record keeping can lead to financial losses or missed opportunities. Inaccurate or incomplete financial records can result in errors in tax reporting, leading to penalties or overpayment of taxes. It can also hinder financial analysis and decision-making, affecting profitability and business performance. In addition, it can also lead to you lacking grants or even loans from banks. Remember, if your financial records are straight and accurate, it's easy for you to secure funding. Then also operational inefficiencies is another consequence. Inadequate record keeping can cause operational inefficiencies and hinder day-to-day business activities. Without proper records, it becomes challenging to track and manage inventory, monitor customer orders, or maintain accurate employee records. This can lead to delays, errors, and customer dissatisfaction. Then we have loss of intellectual property or trade secrets. Inadequate protection of intellectual property or trade secrets due to poor record keeping can result in their loss or unauthorized disclosure. This can have severe consequences, including loss of competitive advantage, compromised market position, and potential legal disputes. Another consequence is damage to reputation and trust. Inaccurate or mishandled records can erode trust and damage the reputation of individuals or organizations. Stakeholders, including customers, clients, partners, and investors, rely on accurate and secure record keeping to ensure transparency and accountability. Failing to meet these expectations, therefore, can result in a loss of trust and credibility. Also, there is inability to demonstrate compliance or defend legal claims. In legal disputes or regulatory investigations, the availability and accuracy of records can be crucial for defense or compliance. Inadequate records may make it difficult to demonstrate compliance with the legal requirements or prove facts in a legal proceeding, potentially leading to adverse legal outcomes. Then there is a loss of business opportunities. In various business contexts, having well-maintained records can provide a competitive advantage and open doors to new opportunities. Without proper records, it becomes challenging to demonstrate a track record of success, eligibility for contracts or funding, or the ability to meet specific requirements. Remember that specific record-keeping requirements can vary depending on industry, country, and jurisdiction. It is important to consult legal and compliance experts to ensure adherence to relevant regulations and best practices. We have come to the end of this video, guys. Thank you so much for keeping it here and also watching it to the end. If you have not subscribed, please subscribe, turn on the notification button, like this video, and also share so that it can reach more viewers. Thank you so much. Until next time, bye-bye.